Yo, what's up, chat? I want to just make a quick little rant about market structure, right? And I'm not gonna like show you guys what market structure is because you guys can go do that for yourselves. I'm just gonna go explain what it is. Where I recommend you go look at what market structure is, I recommend you go to Side Trades' latest YouTube video. It's day 14 of his course. I recommend you also download the video in case it ever gets taken down off YouTube. So, market structure is the backbone to every fucking strategy you will ever trade on the stock. Market structure is respected on the higher time frames more than it is on the lower time frames. So if you're charting out like your swing highs and your swing lows, you want to go onto a higher time frame. And I know for a lot of the beginners, me included, I wanted to stay on like the 15, I wanted to stay on the 5 minute, I wanted to stay on the 1 minute. That's my cat's fucking paw. Lil bro, move out the fucking shop, dude. Okay, back to what I was saying. Market structure is respected on the higher time frames more than it is on the lower time frames. If you go like when I say market structure, I mean the swing highs and the swing lows, right? And not just the swing highs and the swing lows, the general trend, bro. If the market is trending in one fucking direction, it's going to do that for days, weeks, if not months. I've seen it happen. I've literally now when I go back test on gold, and this has all happened in the span of literally under 24 hours after watching this video, I had like the craziest epiphany. It's the fact that gold is just going on a fucking uptrend, and every time it corrects or it goes down, it's just a major correction, right? So selling doesn't really exist, bro. With gold, man, like think about it. If you were getting into a company that was making money, the company would never go down and have like little dips here and there just because of random little things, but the company would overall keep going up forever and forever, right? Like look at the S&P 500 just continues to go up. It has little dips here and there, quote unquote corrections on the higher time frame, but it just continues to go up. So to make something a little more, my phone died while I was talking. Okay, let's get back to what I was saying. And so market structure, just to break it down, I watched Sai's video and I was like, holy shit, let me go try and backtest ICC properly, just like how Sai explains it, and rely on the higher time frames rather than the lower time frame, right? Because ICC didn't work for me when I traded it. Why didn't it work for me? Because I would trade on the 1 hour time frame and then I'd scale down to the 15-minute time frame for an entry and then play ICC like that. And it works, right? The 15-minute time frame is a great time frame, but I would go down to the 5 minute, then I'd go down to the 1 minute, and then I just fucking go down to the 30 second, and I didn't know what the fuck I was doing until I watched Sai's latest video. You guys should literally go watch it. I'll make my own market structure video here maybe in a few days on about my basic understandings of market structure so far. But when you're plotting your highs and lows of your general trend, somebody came into my house, my mom's room. But when you're plotting your highs and lows on your chart, you want to go on to the higher time frame, like the 4 hour or even the day, and then you want to look at like what direction is market going? Is it just going generally up and maybe it has like little dips here and there, right? Or is it going like this way and it has little dips up, right? Up, and that will literally tell you where market is going. And if you just buy at any single time, you'll be successful. But one thing I've noticed is sometimes the overall general trend might be lying to you, even on the higher time frame, and that's why I like to use the 15-minute orb for my entries. So on the beginning of New York session, I'll plot out the first 15-minute candle, then I'll zoom out to the 4 hour for an entry, and I'll enter based off of the 4 hour in the direction of the general trend. Whether the trend looks stronger on the 1 day or the trend looks stronger on the 4 hour, I will just enter on the direction of what direction the strong looks strongest. Whether that direction is on the 1 day or the 4 hour, I will enter in that direction. Because if it looks strongest on the 1 day, but the 4 hour is saying it's still going like bearish, but on the 1 day says it's going bullish, I'm going bullish, nigga, and I'm holding. And I won't enter, like, you know how I said I enter on the 15-minute orb? So I said the orb, but I don't wait for it. I mean, I go out, I don't wait on the 15-minute for a break. I wait on the 4 hour for a break. Because if you wait on the 4 hour for a break of the 15-minute orb, if it breaks in the general direction of your trend, you will be making a lot of money. And for a lot of people, that seems not sexy. Like, it doesn't seem attractive because a lot of people are day trading and the majority of people are scalping and day trading. But I want to trade just like Sai, and I want to trade the higher time frames because I've noticed when I start trading the lower time frames, I have a lot of chop, I have a lot of fear and I'm not confident in my positions, and I'll usually get out of a trade. And like sometimes I want to be in trades for like days. I don't want to be in trades for maybe a couple, like 2 to 3 hours. I want to be in trade for at least like 10 to 20 plus hours, right? Maybe a whole day or 2 or 3. And that's what I'm really aiming for, because when I back tested ICC, I only got into 3 trades in January. But then if you add the 15-minute orb with ICC, you would get into a little more trades, but that's besides the point. The whole point of this is you want to respect the higher time frame is going to be what makes you your money, right? I personally don't scalp, right? But my friend says, if you think about it the same, like you treat the higher time frames and then you just scale down. So if you wait on like the 1 hour and then you enter on the 15 and then you base your exit off the 1 hour, you can do that. Or if you're doing scalp trades, or if you want to like enter off the 30-minute or the 15, you could do that. You could base your overall trend off the 15-minute and then you can enter off the 5-minute, you know? That's basically how my friend described his strategy. And it's literally exactly what I'm doing. It's literally ICC, basic market structure. But instead of like going for the bigger trend, he's only catching like the smaller move on he's catching, well, it wouldn't be a small move, but he's catching a big move on a smaller time frame. Does that make sense? I guess with options, because he trades options, that's more profitable due to like fucking theta decay and shit. But yeah, right now I'm just fucking waiting for Sunday, dude. Now I have all this knowledge on basic market structure. I'm not gonna get stomped out, and I'm not gonna be scared holding trades. I'm a hold, bro. I'm probably gonna hold Monday's trade until, fuck, who knows? I don't know. And also, another thing I want to note down is I might get a swing account, because if I'm gonna be holding trades, I want to have a swing account. If I'm not gonna be holding trades, I might as well, like, you know, stop looking on the higher time frames for entries and look on the lower time frame for an entry and an exit. And okay, this is okay. I think I just had another epiphany right when I was fucking talking. Use the higher time frame as your overall bias, right? That's set in stone, right? You're looking for your trend on the higher time frame, either the 4 hour or the 1 day, and then you go on the 15-minute, and let's say you're entering on you go on the higher time frame for your bias, then you go on the lower time frame for your entry, and you stay on the lower time frame for your exit as well. That could work, right? Like you enter on the 5-minute or the 15-minute, and you exit on the 1 hour or the 4 hour. That could work. It does work. I tried it. It works perfectly fine, in all honesty. But I saw like less losses by taking less trades. I mean, no shit, right? No shit. But if you rode your overall trend over like 2, 3, 4 days, you'd be set. But the same conversation can even be put 2 ways. Like, if you just showed up every day to market open, you can also catch that same movement. So it's a weird one, man. It's a weird one. I think I'm overcomplicating it. At the end of the day, it's just show up every day to the markets. And if yesterday was bullish, tomorrow's probably going to be bullish, and the next day's probably going to be bullish as well, until there is a general reversal in the trend on the higher time frame, not the fucking lower time frame. And I know you guys are going to be like, yo, but what if on the 15-minute fucking reversed? Look, bro, if you're scalping, exit if it fucking reverses on you. But if you're swinging, don't exit because you're swinging. Wait for a reversal on the higher time frame to exit. But if you're scalping, if that shit reverses on you on the lower time frame and you're watching it like on the 1 hour, or the 1 hour isn't even the lower time frame, like the 15-minute, you're watching the 15-minute, it starts reversing, I would get out. But if I'm like on the 1 hour and it hasn't reversed on me on the 1 hour, why would I get out? I'm still gonna stay in, right? It hasn't made if it's making higher highs and higher lows, and all of a sudden on the 15-minute it makes like a lower high and a lower low, why would I get out if I'm swinging? I'd only get out like of that if I was like scalping. But if I was swinging and I saw on the 1 hour or the 4 hour that it made a fucking lower low and a lower high and a lower low, and then does it again and makes another lower low and a lower high, I'm fucking out of there. I'm out. And I'll come back the next day for either New York or Asia session to trade. I know I really gave you guys a mouthful of the most fucking confusing way of my mind and looking at market structure, but to sum it all up, dude, I'm even confusing myself. All I'm gonna say is go watch Sai's video like fucking 10 times, bro, and you'll get it. You'll get exactly what I'm talking about. I'm gonna personally go watch it like 10 more times. But yeah, go on the 4 hour, or the 1 day. I really like the 1 day for overall trend bias, because even sometimes the 4 hour can be choppy, but it all goes hand in hand. If it's all moving in the same direction, you know you're doing something right. So you go on the 1 day, the 4 hour, you look for a trend. The trend is there. You go on the 15-minute New York Open. You plot out your orb, your 15-minute orb, the highs and the lows, the wick high and the wick low, and then you wait for a candle on the higher time frames, like the 1 hour, the 4 hour, not the 1 day, bro. Because if you're waiting for a break on the 1 day chart, bro, you're gonna be waiting there for a long time, my friend. So I'd wait on the 1 hour or the 4 hour for a break of the 15-minute orb. And in all honesty, I really like the 4 hour for a break on the 15-minute orb, especially if I'm swinging. The reason being is if you only wait for a break on the 1 hour, you're not gonna get a crazy movement, or you might miss, like it might be choppy, it might retest, and it might do a lot of bullshit, right? But if you wait for a break on the 4 hour, it's gonna be a very straight trend. Like the trend is just gonna go straight up or straight down, depending on what direction you're trying to trade in, right? And again, bro, if for the last fucking few weeks price has been going up, why the fuck would I be selling? Why the fuck would I be selling? It is just a correction on the higher time frame. Think about that shit. So just be patient, sit on your fucking hands, and wait for an entry. The reason why I keep saying use the orb as an entry is sometimes it's really hard to see entries with basic market structure. It's not hard. It's really not hard. You just gotta be patient and wait for it to break structure, and so you know what direction it's going in. But that's the whole reason we use the orb. Once the orb is broken, it signifies break of structure. And if it breaks the orb in the intended direction of the general trend you're looking at, so let's say you're looking at the 1 day and the 4 hour, and I'm talking about higher time frames, right? Not the week, like the 1 day or the 4 hour. And those say price has been going up for a long time. And yes, maybe price has a little bit of dips, but overall it's making higher highs and higher lows. I'm gonna keep going bullish, right? And I'm gonna go down to the 15-minute, plot my orb, wait for the orb to break on a higher time frame, like the 1, 4, or the 4 hour. And then once it breaks on the higher time frame, I'm gonna stay on the 4 hour or even the 1 day. And I ain't gonna lie to you, I've been like back testing, holding trades, and just watching the 1 day instead of watching the 4 hour or the 1 hour. And on the 1 hour, you get faked out. But if you held on the 4 hour, you would have like held for way longer. But if you held on the 1 day, you would have held for even longer. So I might start holding trades on the 1 day and compare the 1 day to the 4 hour when I'm trading. But exiting off the 4 hour, you lose a lot less money than exiting off the 1 day. Does that make sense? You hold trades for longer on the 1 day, but your exits are better on the 4 hour. So I'm gonna have to backtest that a little more thoroughly to have an opinion on that one. So, but yeah, to make it short, scale out once you have your entry on once you've plotted your orb on the 15-minute. Scale out, wait for it to break on the higher time frame, like the 4 hour or the 1 hour. This is all personal preference, but I like the 4 hour just because it signifies the trend is strong, right? Higher time frames get respected more than lower time frames, right? So if it breaks on the 1 hour, I'd rather it break on the 4 hour because trend will be respected a lot more if it broke on the 4 hour. And I wouldn't have to wait there for another break on the 1 hour, you know? If it breaks on the 4 hour, I know that price is going in that direction. I don't have to wait for another candle to break again, you know, or to go above that next candle for the 4 hour. I could just get in and hope that it goes in the right direction. So I get in on the 4 hour and I just sit on my hands and wait, and I scale out to the 1 day, or I stay on the 4 hour and I just compare the two until a price stops trending and price starts going in the opposite direction of the trend. And I start seeing, for example, if we're in a bullish trend and price starts making lower highs and lower lows, I'd get out. And I said the same thing like 20 fucking times, but I have to say it 20 fucking times so our monkey brains can understand that we have fucking caveman brains that we're not meant to be trading, right? But we're trying to make them to understand how trading works. So yeah, this is gonna be a hard process. It's gonna for sure be an uphill battle, but Trust me, this shit is not that difficult. It's not that hard. I genuinely feel like I've unlocked a new place in my soul. I feel very confident with trades. I feel very confident with trends now. Like, genuinely today, I felt really weird hopping in a trade. Why did I feel weird hopping in a trade? Because I could see that the overall trend was going bearish, right? But when market opened, it was going bullish. On like if you look on the 4 hour, or the 1 hour will be bearish as fuck. The 4 hour will also be bearish. But then you look at the day on gold, like, what is this guy doing? Alright, camera died for like the third fucking time, so I'm gonna make this quick. Just trust the higher time frames. They will literally save your life. And if you're scalping, still trust the higher time frames. But instead of entering and exiting on a higher time frame, just enter and exit on the lower time frames. It makes it so much easier. Literally watching Sai's video on market structure and learning that market structure is the backbone to every strategy has made me realize that I know trading, and trading is super fucking easy. I've just been overcomplicating the most easiest fucking thing on earth, right? So don't be out here looking for IFVG gaps, fucking fair value gaps, all this stupid shit. Just look at the trend and get in. Don't over leverage. Risk small, make big wins, take small losses. It's very easy, bro. It's not easy, it takes practice, but it's easy when you think about it. And even in practice, it's easy, just clicking buttons. So yeah, today I felt weird about the general trend because gold is going down on the 4 hour and 1 hour, but on the 1 day, gold still looks like it's trending up, and it looks like on the 1 day, it's just on a major correction. So that's weird. Excuse me. Also today, gold was trending up as well, so gold just kept going up. So I don't know if it's gonna go up or down, but if I'm basing it off the higher time frame, I know gold is going up. That's what I know. That's what I'm seeing, and I'm not gonna get in a trade until I see gold keep going up or break the 15-minute orb on the next New York session on Monday morning, or the Asia session on Sunday morning, early Sunday morning. I low-key might wait for New York just to see New York volume, but if Asia session is trending in the general direction I want it to, and the 15-minute orb on Asia session gets broken on the 4 hour, I will fucking enter buys. I will enter more buys. I don't give a fuck. But one thing I'm really weirded out is Sai is calling for gold to sell, but he wants it to go all the way to 4,900. It's at 4,700, so we still got $200 left to go to hit his quote-unquote stop loss or to hit his entry price. I really don't know, but he wants gold to sell. I want gold to continue buying, so, and I'm learning from Sai. I'm kind of confused because I'm not seeing what he's seeing. Like, I see that on the 4 hour, gold is in a downtrend. So if you hopped into sales on the 4 hour, right, you might make some money, right? But if you hopped onto buys and you base it on the 1 day, you'd still also be making money. It's weird because right now we're in chop. And one thing I've realized about being in a range, especially when trading basic market structure and you're trading any strategies, when you're in a ranges fuck up your strategy because you're not trending in one general direction. So the one way I've really thought about managing ranges, right, is you look at the price before it started ranging. Where was price going before it started ranging? If price was going up or down, that's where you decide to go, and you just hold, put stop loss at like the low before the range was made, or right under the range swing low, and then you just hold and pray for Jesus and fucking hope the range gets broken. That sounds really bad, but that's still basic market structure in all honesty. But yeah, I'm gonna end it here. I'm gonna go outside, probably smoke up. I'm gonna go watch Sai's video like 20 more fucking times. I recommend you guys to. I'm also edit this video and upload it right now for y'all. I hope y'all enjoyed. I'll see you guys again on Sunday or Monday. Or maybe I make a back testing video for y'all. I don't know. I just go take this shit day by day. I have no real plan. When it's not trading, I just live life like there's no tomorrow.